I'm Greg Bonnell. Welcome to Money Talk Live, brought to you by TD Direct Investing. Every day I'll be joined by guests from across TD and elsewhere, many of whom you'll only see here. We're going to take you through what's moving the markets, answer your questions about investing. Coming up on today's show, we're going to be joined by noted investor Cathie Wood from ARK Invest. We'll discuss whether this tech rally that we've seen that's been fueled by AI can continue. Money Talk's Anthony Okolia is going to give us a preview of tomorrow's key U.S. inflation report. And in today's Web Broker Education segment, Megan Hendricks is going to show us how you can screen for different ETFs using the platform. So here's how you can get in touch with us. If you're watching on YouTube, just email moneytalklive@td.com. Or if you're watching here on the platform on Web Broker, you can fill out that viewer response box under the video player. Before we get to our guest of the day, let's get you an update on the markets. Got some green on the screen on both sides of the border. We'll start here at home. The TSX Composite Index, a pretty healthy 235 points to the upside, more than a full percent. Noticing a lot of the mining stocks getting a bid today. Gold, silver, some of the other commodities are to the upside. We'll check in on, though, a different kind of commodity play. Cameco, of course, a uranium play. It's making some gains today. Notice Denison Mines in the same business also making some big gains at 72.63. You got Cameco up almost 9%. Barrick Gold riding high with the price of gold. Might something to do with Jay Powell's testimony for the second day now in Washington. Some of the headlines I'm seeing perhaps suggesting that they're opening the door just a little bit wider to a possible rate cut maybe in the fall. Barrick up about 2% to 24.29. Now south of the board, the S&P 500, the NASDAQ continue to build on record high gains. You're up another 20 points today for the S&P 500, about 1/3%. The tech-heavy NASDAQ, how's it faring against the broader market? Right now, I think it's a little bit firmer, up about 0.5% or 93 points. And the chip makers, we've been keeping an eye on NVIDIA all week as they continue to make gains today. One of its rivals, Advanced Micro Devices, up to the tune of 3.33%, $182.95 a share. And that's your market update. U.S. markets continue to hit new highs, and technology, artificial intelligence have been a big part of that story. But can these tech stocks continue their AI-fueled rally? Joining us now to discuss is Cathie Wood, CEO and Chief Investment Officer at ARK Invest. Welcome back to the show. Great to have you here in person.
Thank you, Greg. Thank you for inviting me back.
All right, so we're going to have a great conversation. Let's start with, just for the viewers who may not be aware of your process, of the firm's strategy. You focus on disruptive innovation. What does that mean?
Disruptive innovation is technologically enabled and transformative. So we're focused on 5 major platforms: robotics, energy storage, artificial intelligence, blockchain technology, and multi-omic sequencing in the life science space. Those are the major platforms. They involve 14 different technologies. And what's so interesting today is AI is the biggest catalyst behind really the convergence between and among these technologies. So it's creating some spectacular opportunities like Tesla. Tesla is the convergence of 3 of the platforms: robotics, autonomous vehicles, which they're about to produce, are robots, energy storage, they will be electric, and artificial intelligence, they will be powered by AI.
Is that the key here when we think about artificial intelligence? Because obviously the first wave of it was, do you have the GPUs, the graphic processing units that we thought were good for video games? Turned out they were pretty good, what NVIDIA was making for artificial intelligence, but realizing that it starts to pull a bunch of what we thought were disparate groups together?
Yes. AI is probably going to touch every industry and every company out there. So, and it doesn't matter what the sector is. Now, NVIDIA is really the hardware phase of the AI revolution, and they are building some software, but they historically have been a hardware company. If this revolution is as big as we think it is, then we should see those GPUs being put to good work. And I just gave you a good example. Autonomous technology is going to transform transportation of all kinds, not just cars, but trucks and drones. We're going to see deliveries by drone in the future. It's all the same convergence, and it's all catalyzed by AI. The longer it takes to happen, then the further ahead of itself NVIDIA might become. So we shall see.
Okay, further ahead of itself. There are questions in the market after the rally we've seen. We continue to set new highs on the S&P 500, the NASDAQ, tech being a big part of that. People start thinking, have I seen this before? Have I seen the dot-com era in my own experience, and is it happening again? What are we thinking of here in terms of when people throw out phrases like reversion to mean?
This is not like the tech and telecom bubble. The companies that are at the top of the indexes and driving them are very, very profitable companies and very well-established companies. So very different. If there's any time we're comparing this to, it actually is the 1930s. Now that might sound surprising because that was the Depression, but if you looked at the concentration in the market in the early days of the Depression, it was back then the unemployment rate was up to 25%, GDP dropped by 30%. So there was this question, are companies going to survive or not? And it was binary. And so you had massive concentration towards a few names. AT&T was at the top of the list. Telephony was just making its way into the global economy. And so that concentration. What happened after that? What happened after that is we went into a strong bull market. It broadened out, and smaller cap stocks, they could be large, just not mega cap, large, mid, small, they way outperformed the mega cap stocks. And if interest rates come down, as we believe they will, we believe that will be the catalyst towards broadening this market out.
That's interesting. Let's talk a bit about interest rates, because obviously we're going to get an inflation print. As we get those, you try to figure out where Jerome Powell and the Federal Reserve's head may be. Jerome Powell this week seemed to be suggesting, listen, we're cognizant of the fact that if we keep rates too high for too long, we could hurt the economy. Seems like the door's opening wide. If we do see a cut this fall, maybe two before the end of the year from the Fed, depending if the market's right, what happens here for some of these tech stocks? Because there's already been a pretty significant run.
Yes, but the run has been very concentrated. We do believe the market will broaden out, and that is how we've positioned our strategies. We're a very differentiated exposure to AI than the Mag 6. I guess Mag 7.
I know she said 6. So I guess is Tesla back in the group now after the run they've had?
They bumped Tesla out last year, but now Tesla's performed this year, or is performing, and so I think they might invite it back in. It is the largest AI project in the world. And even NVIDIA on its calls these days is saying that the auto sector is probably one of the biggest beneficiaries and movers and shakers in the AI space. We think that's going to be very concentrated to just a few winners in a winner-take-most strategy. So yes, we do think with interest rates coming down, the market will broaden out and benefit the AI beneficiaries that we have in our portfolio. Many people are very surprised to see as much in the healthcare realm in the flagship strategy. And we do believe that AI is going to help when converged with sequencing technologies and gene editing, that we're actually talking about curing diseases, not treating symptoms, but curing diseases. I can't think of a more profound application of AI. And so we have as much in the multi-omic space, which is what we call it, as we do in pure play technology as measured by GICs.
Interesting stuff there. If we're talking about, inflation being tamed, central banks delivering cuts. Our central bank already delivered one. We're waiting for another one later this month. People worry that inflation will be reignited. I think you have more of a view of a deflationary environment being more likely.
Yes. Yes. In fact, we see two ways that's going to happen. It's already happening. If you listen to quarterly earnings reports, you listen to Walmart, Target, Costco, Best Buy, you listen to Starbucks and Wendy's and McDonald's, they're all cutting prices because the consumer is under great pressure, and it is the middle income consumer now that is capitulating and looking for these deals. So that's a cyclical phenomenon, and that's outright prices coming down. which rarely happens when you think about it, right? The second source of deflation is technologically enabled. So the 5 innovation platforms that I mentioned, all of them follow learning curves, which are expressed in cost declines and then price declines. The 5 platforms are highly deflationary, but it's good deflation. As costs and prices come down, these new technologies will scale across more and more sectors and become mass market opportunities. So these price declines are associated with booming growth. So yes, we think on 2 fronts, cyclical and secular, there are deflationary forces, and that the surprises in the next few years are going to be on the low side of both inflation and interest rates.
Again, fascinating stuff. Finally, your company is based out of the U.S. for people who've been following you, but you've also been active in Canada as well. I mean, you're here right now. Tell us a bit about that.
Yes, we've partnered with BMO. And we have 3 funds with them. Our flagship, one focused on the next generation internet, which is the focus is importantly on AI and cloud. And then the genomic revolution, which broadened out is the multi-omic revolution. So we're pretty excited. We think that our actively managed portfolios are a very good complement to the diversified offering of more passive funds and index-based strategies that BMO offers. So we think it's a win-win.
Interesting stuff, and a great start to the program. We're going to get to your questions about technology stocks for Cathie Wood from ARK Invest in just a moment's time. Mind, of course, you can get in touch with us at any time. Just email moneytalklive@td.com, or you can fill that viewer response box on the video player on Webbroker. Right now, let's get you updated on some of the top stories in the world of business. Take a look at how the markets are trading. We were talking about the artificial intelligence boom. Well, it actually saw Taiwan Semiconductor grow its second quarter sales at the fastest pace in 2 years. The world's largest contract chip maker grew that top line 40% in the quarter to $6.4 billion in sales. Taiwan Semi, of course, supplies NVIDIA and Apple with advanced AI chips. Walmart says it's going to open 5 automated distribution centers to meet demand for its online grocery business. The retail giant says the new centers will modernize the supply chain and improve their profit margins in the coming years. Walmart did see its e-commerce business grow by 22% in its most recent quarter. Smartphones, we're all familiar with them. Apparently they need to make way for the smart ring. Samsung unveiling its Galaxy Ring as the company is trying to step up its offerings of wearable tech. The smart ring incorporates health tracking apps and AI technology. The move, broadly seen as taking aim at Apple's foray into wearable tech. Quick check on the markets. We'll start here at home on Bay Street with the TSX Composite Index. We've got a nice move in some of the commodities plays today and the underlying metals. We've got the S&P TSX Composite Index up a very healthy 223 points, a full percent. And south of the border as we await that inflation print tomorrow. Still try to weigh what Jerome Powell's been telling lawmakers in Washington. You do have the S&P 500 up another 22 points today, pushing further into record high territory. Hey, we're back now with Cathie Wood, CEO and CIO at ARK Invest, taking your questions about technology stocks. First one for you here, Cathie. What do you make of the big market concentration we've seen in the magnificent 6+1s, magnificent 7 tech stocks?
Well, we think that there are 2 reasons this is happening. One is interest rates did move up dramatically to 5%. And so these companies have a lot of cash. And they are cash-like innovation names. That's how I describe them. So they have the benefit of that, and they have the wherewithal to experiment with and move their businesses forward with artificial intelligence. So they seem like the first stop for a lot of investors. That concentration, as I mentioned, is something we haven't seen since the Great Depression, which is kind of ironic. But cash back then was king as well. And there were new technologies evolving. AT&T was at the top of the... when the market broadened out, though, it benefited so many other stocks more dramatically in the ensuing 4 years, 1932 to 1936. And we think that's going to happen again, and this is what we are positioned for with our strategies.
Is part of that concentration in the seven the fact that you mentioned how much cash they have? Because the whole artificial intelligent enterprise, at least at this hardware build-out phase, does not seem cheap. You need deep pockets. That's when I think about who could knock them off their perch. It's like, well, you'd have to have a pretty deep pocket to get in there.
Yes, and well, what's interesting also is they're getting into each other's pockets. If you look at what we call the hyperscalers, so Amazon, Alphabet, Microsoft, they're the cloud providers. They're the biggest consumers of GPUs, and they're developing their own chips, all of them. Google already has the TPU, and Amazon, I think it's called the Graviton. And you have another two hyperscalers, Meta Platform evolving its own chip, and even Tesla, Dojo, its new chip. So what's interesting about NVIDIA is its gross margins have escalated. I remember them being in the 40s for a very long period of time. They're approaching 80% now. Whereas their largest customers, the ones I just named, especially the cloud providers, their cloud services gross margins are closer to 50%. So when the hyperscalers see their margins lower than one of their suppliers, they basically think about vertically integrating. They've done it before. I've seen them do it before. So that's something to watch out for.
So another question now from the audience for Cathie. Someone wants to know how you're approaching investing in AI right now. At the top of the show, you talked about, what might have felt like disparate groups all starting to come together or will come together.
Yes, well, as I mentioned, the largest AI project in the world is Tesla. And so to dimension that, in the next 5 to 10 years, we believe that the robotaxi opportunity, broadly defined, globally, including China, will scale from essentially nothing now to an $8 to $10 trillion revenue opportunity. That's not market cap, that's revenue. And we believe that the taxi platforms, the autonomous taxi platforms like Tesla, are going to get at least half of that pie. So in the $4 to $5 trillion range, from again nothing now. So it's a very big opportunity. It is the biggest AI-related opportunity out there. In terms of the broader application, this convergence of AI in the healthcare space, as I mentioned, is creating cures. So CRISPR Therapeutics has been approved. 2 of its therapies have been approved in the US, the UK, and Europe as effectively cures for 2 diseases that had not only no cure, but no treatment for symptoms, beta thalassemia and sickle cell disease. And they're working on diabetes now. This would not be possible without the convergence of sequencing technologies to figure out what's mutating in a genome, and artificial intelligence to be able to sift through the 6 billion bits of code in our genome, and then combine that with editing out the programming errors in our genome. All of these technologies are working together. And we do think healthcare is going to enjoy some of the most profound applications of AI.
I found it fascinating that you used the word code to refer to our own bodies,
yes,
and what makes us tick, and obviously there's almost a convergence of what we're seeing in technology along with this crude matter, I guess
there
we
you
could call
go.
it.
Yes, it's our genome, and 6 billion bits of code. I think we have 37 trillion cells in our genomes on average. Human beings cannot sift through all of that. We need the machines, we need the AI, we need generative AI, which is where we are now. So it's very exciting.
Interesting stuff indeed. As always at home, make sure you do your own research before you make any investment decisions. We're going to get back to your questions for Cathie Wood on technology stocks in just a moment's time. Reminder, of course, you can touch with us at any time. Just email moneytalklive@td.com. Now let's get to our educational segment of the day. If you're looking to find different types of exchange-traded funds on the platform, well, Webroker has tools which can help. Megan Henricks, Senior Client Education Instructor with TD Direct Investing, joins us now. And Megan, good to see you. You're going to show us how we can find ETFs that cover certain parts of the market.
Yes, I will. So as you know, a lot of investors are interested in ETFs, but there's so many out there that it can be difficult to find the right category for them. So let's get to Webroker so I can show you these different categories. Once we're here, we're going to go under Research, under Investments, go to ETFs. In order to see the different pre-selection categories, we're going to change tabs to Categories. And from here, you'll see these already created for you. So we see precious metals, we see global dividend. If the category that you're interested in isn't showing, it's possible that it's on the US categories. So to toggle between the Canadian and US categories, we need to go to the top and change from the Canadian flag to the American one. And now you can see that the categories have changed. For instance, now we can see digital assets, technology, global large stock growth. The last thing I want to show you is back in the overview tab. So let's get back to it. I'm going to scroll to the bottom until we get to our ETF quick screen tool. This will allow us to put in the criteria that matters to us to really help in finding that right ETF for you. So let's start off by putting in an ETF category. I'll select a Canadian equity. So now we see that it's found 60 matches. I'm going to add management expense ratio and select the lowest one. We don't necessarily love paying fees, so let's see if we can find. So now we're down to 22. I'll add one last one of Morningstar rating, and we'll put a minimum of 4 stars. So now we can see that the system has found us 11 matches. So this is a really great place to start to find the right ETF for you when building your portfolio. And that is how you can use our search ETF categories in Webroker.
Great stuff as always, Megan. Thanks for that.
Thank you.
Megan Henricks, Senior Client Education Instructor at TD Direct Investing. And for more educational resources, you can check out the Learning Center on Webroker, or you can use this QR code. It'll navigate to TD Direct Investing's YouTube page, where there are more informative videos. Okay, we're back with Cathie Wood, taking your questions about technology stocks. Lots coming in just the past couple moments. First one we'll take for you here, Cathie. What is your view of the Chinese EV makers like BYD and NIO? What sets Tesla apart from these very competitive car makers?
Yes, it's been very interesting to watch the Chinese EV market evolve. I think the Chinese government invited China in, first company ever allowed in without a local partner, because it wanted to learn about this new way of manufacturing vehicles. Of course, now we're seeing incredible performance by especially BYD. And BYD's heritage is in the battery space, so cell phones and so forth. So really good start. The next wave of competition is autonomous. And what's been so interesting to us is we did not think that the Chinese government would be very friendly to Tesla in that regard, because this involves data that they consider a national security issue, data about the roads and so forth. Nonetheless, they're partnering with Baidu's Apollo. In speaking with Baidu, the Baidu team, they think this is going to be a 2-horse race. The autonomous race is 2 horses, Tesla and Apollo, which is really interesting because we put very little in our valuation for Chinese autonomous for Tesla. So that's going to be a source of upside surprise if Baidu is right. We don't see BYD and NIO going after autonomous as aggressively as Tesla and Baidu/Apollo. So, but China wants to be first, and they are opening the doors to innovation because they're trying to effectively redress some of the issues. Property is in a bit of a meltdown there, and they're reorienting the economy towards technology, which is a good thing. You know, when we see unit growth going up, that's associated with cost declines, which accelerates the innovation and impacts the rest of the world. So we actually are very excited that China is focused on innovation in the way that it is.
Is the risk to Tesla's foray then into this space, the fact that China's ambitions might mean that at some point they would favor a Chinese company like BYD over a Tesla?
Well, that was our working assumption, and still is in terms of the way we've modeled it. But we have been surprised that they're going to give Tesla access to data that we thought they would consider a national security issue. So, we're excited about what's going to come out of China.
Okay, another question now from the audience. This one about November. Will the U.S. presidential election impact technology?
You know, we always say innovation is bipartisan. Who says they're against innovation?
Yeah, running on a no-tech platform.
Exactly. Who's against it? So we are seeing bipartisan efforts even in the digital asset space when it comes to legislation. So I think that's very reassuring.
Okay, so that'll be something to watch, obviously, as we grind closer to the fall. Someone wants to know, we've talked about healthcare and how it can be transformed. They want to know if there's any healthcare companies that are poised to benefit from it, maybe what they could do some homework on.
Well, I mentioned CRISPR Therapeutics a little while ago. Sam Kulkarni, the CEO of CRISPR, introduced us to Repair. He is on Repair's board. So that I would say is high praise right there. So Repair Therapeutics is working in the same area, gene editing. And of course, as I mentioned before, you need sequencing technologies, artificial intelligence, pulling together to identify areas where gene editing will be impactful. So we think the gene editing space broadly, another one in the US is Intellia. Beam Therapeutics is another one. We're also focused on names in the tools space and companies that are harnessing AI to help discover new drugs. So Recursion Therapeutics is in that category. Absci is another one in that category.
When you talked about Repair and you mentioned that the opportunity there, what could be the risk here for a company like this? Is it the fact that there'll be a lot of competition in the space?
Well, we think that in the technology space, speed to market does count. Picking the right spots counts. We passed the biggest hurdles, I think, about 4 years ago. The concerns around gene editing, especially CRISPR-Cas9, the concerns were around, is this going to cause off-target effects or side effects that we don't understand? 4 years later, we're finding it's quite a safe technology. And so now the battle is on, each company picking different spots, some of them trying to prove themselves out in the same spot because each company needs to prove the safety and that it does have the technology. But I think the safety profile was the biggest question, and now is the adventure, just seeing how many rare diseases to start with, and then how many broad-based diseases will gene editing apply to. It's interesting to see CRISPR Therapeutics even think about diabetes. It is responsible for, in the US, more healthcare spending because of the side effects of diabetes than any other disease. And so that's a big, big candidate. And I know that Sam Kulkarni believes that this group of stocks is the equivalent of Genentech in the early days of the biotech revolution. Genentech, Amgen, Regeneron, a few companies dominated the biotech revolution. I think some of these names are going to be the most important players in the gene editing revolution.
Some fascinating ideas there for our audience to do some homework on. We're going to get back to your questions for Cathie Wood on technology stocks in just a moment's time. Always make sure you do your own research before you make any investment decisions. And a reminder, you get in touch with us at any time. Do you have a question about investing or what's driving the markets? Our guests are eager to hear what's on your mind, so send us your questions. There are 2 ways you can get in touch with us. You can send us an email anytime at moneytalklive@td.com, or you can use the question box right below this screen here on Webbroker. Just write in your question and hit send. We'll see if one of our guests can get you the answer right here at Money Talk Live. Well, ahead of the U.S. Federal Reserve's rate decision later this month, we're going to get a pretty key report landing tomorrow morning. That's inflation. Money Talk's Anthony Okolie joins us now with a preview of what to expect. What are we expecting, Anthony?
Yeah, so before we get to that, this new inflation report does come as the Fed Chairman, Jerome Powell, is testifying to Congress. And Powell didn't give us much in the way of new information, but he did state that the labor market is in better balance and that job gains have not been as broad-based. Now, he also re-emphasized the need for more good inflation proof that would strengthen the case for looser monetary policy. Now, before we get the U.S. inflation report tomorrow, we did get a look at the Fed's preferred inflation gauge for May, the PCE index. And there we saw that core PCE cooled slightly from April, but came in line as expected, as did the headline print. And as this chart shows, the latest PCE index marks the lowest annual rate since March of 2021. Now, looking ahead to June's inflation print tomorrow, TD Securities expects core inflation likely rose 0.2% in June, assuming another large month-over-month retreat in gas prices. But TD Securities does expect that food price inflation will remain subdued. With regards to housing, they expect housing inflation to move lower along with hotel rates and new vehicle prices. Now, with that backdrop, TD Securities sees headline inflation coming in flat month over month, again, assuming that energy prices will continue to provide large relief. Now, with respect to interest rates, TD Securities is still calling for 2 Fed rate cuts this year, one in September and another one in December. Greg?
It's going to be a big report. Thanks for breaking it down, Anthony.
My pleasure.
Money Talk's Anthony Okolie. Now for an update on the markets. We are having a look at TD's Advanced Dashboard, a platform designed for active traders available through TD Direct Investing. Let's jump into the heat map function here. A nice view of the market movers. We'll start with the TSX 60. We're screening by price and by volume. As you can see, we have a fair amount of green on the screen. Cameco in the energy basket is clearly the leader. A uranium play, but interesting too, we got some of the basic material mining stocks. We are seeing firmer prices for gold, silver, some other key commodities today. So you got a Kinross up more than 3%, a Barrick Gold ABX up about 2%. We're talking tech today. If there's a name in the red, interesting, it's Shopify, down to the tune of about 2% on Bay Street. Now, south of the border, we see the S&P 500, the NASDAQ pushing into new all-time high territory. We're just going to narrow it down to the S&P 100, a little easier for me to look at. And you can see it's chip makers dominating today. You got NVIDIA up 3%, you got AMD up 3.5%. Intel, not so much, but also there's Apple. If we're talking AI, they've been getting in there lately as well. They're up about a little more than 1.5%. Okay, we're back now with Cathie Wood, CEO and CIO at ARK Invest. Lots of questions coming in for you, Cathie. That's what we like. Just showed Apple on the screen. What's the outlook for Apple?
Well, we do think with their AI moves recently, cooperating with or with OpenAI, but open to working with other foundation models as well, that they're going to enhance their services, which is good. So we'll have a refresh cycle, which will take them out of the flat revenue growth that they have seen for the last year or so. So that's good. The question for us is, they have privacy policies and security policies, and we think they will allow some of the benefits of AI onto their platform, but probably they will not allow some of the freewheeling benefits that other companies will embrace and move into the market, hopefully competing with Apple. Samsung might be a little bit more proactive in that way. So it's going to be interesting moving forward how limited or not Apple is in terms of the AI features and functionality.
I hadn't considered that as part of the Apple story. That's really interesting to me, because the first I was thinking when you talked about bringing AI offerings to the phone, I know my iPhone 12, which I currently have right now, isn't going to be able to handle that. They're going to look for a refresh.
Yes.
Yeah, but I hadn't thought about the idea that for all the times I've been asked in the past couple of years, can we track you here, can we track you there? There are those privacy concerns.
Yes. Very much so. And so we're just wondering, okay, and there are people who feel very good about that because they're a bit concerned about what AI might do, and that might work to Apple's benefit. We're having a big debate internally whether Apple is in what we call now the sustained innovation camp or in the truly disruptive innovation. And we're coming down to, of course, it's the sustained innovation front. What they're doing is not going to be revolutionary. It will be adding features and functionality and making the phone even more useful in our personal lives because of all of the data they have on us. But away from that, it'll be very interesting to see what other companies do, harnessing AI in much more provocative and creative ways.
I had a feeling I've had to ask my kids how the AI offerings are looking on Apple when they come, because in terms of priority in my household for getting a new phone, I'm probably at the bottom of the list, and they might be at the top of the list. That's what it goes. Keep the kids happy. All right, another question now from the audience for Cathie. This is about Corning. I hadn't thought about this until I saw the story yesterday. Can Corning be considered a technology stock as opposed to industrial? I owned it for a lifetime, in part because of their unwavering commitment to research, and fiber optics, et cetera, is still important. Yeah, I was looking at the Corning story yesterday, and I thought, oh, this is what I've not been thinking about in terms of Corning, the fiber optic stuff leading into AI.
Yes. Yes, and so anything that facilitates faster streaming and so forth is going to benefit. We would put Corning in the sustained innovation category. So it's no longer revolutionizing in terms of new technologies like it was in the late 90s as we were moving into the internet revolution and broadband revolution broadly. But it is formative, in terms of infrastructure build out. I know for a time there, Google was building out its own fiber optic network city by city because it was so frustrated with the service. That changed. AI may be another reason for fiber optics to be built much more deeply into each city.
Interesting stuff there on Corning. Another question now from the audience. We've talked a lot about AI. What other trends in tech beyond artificial intelligence are interesting to you? Is there something in the world other than AI right now?
Well, as I said, AI is going to be converging with all of our other platforms. So in the robotics space, we're seeing a lot in, we know Tesla's working on a humanoid robot, has, I think, 2 now working in its factories. Teradyne is one of our holdings, bought Universal Robots, which it was a Danish company. And we believe that the robotics revolution is probably going to be, from such a low base, is probably going to be a big surprise. I know that many people think, there are 8 billion people in the world, and we're all probably going to have our personal robots assisting us, or maybe 2 or 3 in the household. So I don't know how many people think that's a reality anytime soon, but the cost curve associated with industrial robots is dropping so quickly that we think the proliferation is going to be faster than most people expect. Today, robotics, the number of industrial robots in the world is something like 700,000, very low base. Why? Because they are so dangerous. They've had to be kept in cages, especially in auto manufacturing and other industrial plants. Now they're going to be covered in sensors so that they can work alongside human beings.
How should we feel about that as human beings? How should we feel? Should we be excited? As a kid, I dreamed of having my own R2-D2,
yes.
From Star Wars. Yeah. But now when I hear about, industrial robots, should we be excited?
We think that this is a $25 trillion market way out there. Half will be industrial, half will be non-industrial, more helping us. How should we feel? I think in the workplace, robots are going to make us all much more productive. And just like AI generally is going to make knowledge workers more productive, robots, which combined with artificial intelligence, are going to do a lot of the menial work that we don't like to do, and free up our time to do what we do like to do. And so I think we'll be able to dig into our creative selves and spend more time in that realm. So we think robotics is going to be a very exciting and unexpectedly rapid development during the next 5 to 10 years. I mentioned, Tesla, the autonomous cars are robots. Just the fact that Elon has such ambitious goals for its robots, these cars, is going to accelerate the development in all other areas of robotics. Because again, technology follows cost curves that are based on unit growth. That's why we like China getting into anything that is technology and involves unit growth. It'll help us move this new world of technology into the future faster. So I think certainly robotics, energy storage. We know that the big gating factor now for data centers associated with AI is connecting to the grid. So we think energy storage. So generators and utility ecosystems that are putting storage units in, they're going to become a more important part of the solution. Blockchain technology, we're very focused on how developers are building now, finally, the layer of the internet they should have built 30 years ago if they knew that commerce and financial services would be a part of the internet. So we're going to see many more efficiencies coming about. I think a lot of what you're going to hear me say is productivity and efficiencies. For knowledge workers, we think AI alone is going to increase knowledge worker productivity 4 to 5-fold. Can you imagine doing 4 to 5 times the work you're doing today?
Not feeling overworked.
And not feeling overworked. There's going to be a lot of help from machines. Again, freeing you up to do what you do best.
Okay, we've run out of time for viewer questions, but just as a closing thought, I mean, we've covered a lot of ground right here for people thinking about artificial intelligence, but the technology space, obviously it's a longer term play. What do they need to put in the forefront of their thought process?
Well, I do think if they're exposed to the broad-based indices out there, which now are seeing significant concentration, a way to mitigate the risk associated with concentration is to diversify into more smaller, medium, and just large cap stocks touching all of the areas of innovation that we discussed today.
Cathie, it was a pleasure having you here. I'm so glad you could visit us in studio, and I learned a lot, and I look forward to the next time we get to chat.
Thank you, Greg. Thank you very much.
Our thanks to Cathie Wood, CEO and CIO at ARK Invest. As always, be sure to do your own research before you make any investment decisions. And if we didn't have time to get to your questions today, we're going to aim to get them into future shows. You want to stay tuned for tomorrow's show. Sam Chai, VP Active Fixed Income Portfolio Management at TD Asset Management, will be our guest. We're going to get his reaction to that U.S. inflation report that's going to land in the morning. Then we're going to take your questions about fixed income. Reminder, of course, you can get a head start with those questions. Just email moneytalklive@td.com. That's all the time we have for the show today. Thanks for watching, and we'll see you tomorrow.